Hello. Hi, Phil. How are you?
Yeah, I'm very good this week. How are you keeping?
Yeah, I'm good, good. So today we wanted to talk about non-domicile because last week in the budget they made some changes in the domicile status. So do you want to talk about what's the current regime regarding domicile?
Yeah, I mean the whole non-dom thing hits the papers quite regularly, doesn't it? And yeah, it flashes up. Always it's a bad thing or whatever. But it's probably another one of those things that people don't quite understand usually, and you get a bit of headlines around it. So domicile, in essence, is usually you have a domicile of origin. So where you have your roots, where you are from, and that doesn't necessarily mean where you live. We're all pretty familiar of our residence, and if you start working in this country, you become a UK resident, so you pay UK income tax. Fair
Yeah.
enough. But if you're domiciled from another country, you come and live here, you still will pay UK income tax on your UK earnings. That's fine.
Yeah.
But whilst you remain what's known as non-dom, then income that originates outside of the UK doesn't get UK tax until you become domiciled. So there's a few rules around that, and it's called what's known as the remittance basis. So you remit that income over to this country, and you don't pay any tax on it for the first few years. And that non-dom status can become quite valuable. If you sort of try and picture a client that lives over here and has lived over here for a few years and earns some money here, but perhaps they earn a lot of money from foreign investments or something. So to keep that non-dom status, you can pay. You can pay £30,000 a year if you've been here 7 out of the last 9 years to keep that remittance basis, keep that non-dom status. That goes up to 60,000 a year if you're here 12 out of 14 years. So you can see that's quite a lot of money to pay on an annual basis.
Yeah.
You weigh that against how much tax you'd pay if you weren't on that basis. So you realise you've got to be earning quite a lot of money abroad for that to be worthwhile.
Yeah.
And so that's all around income tax. Then you've got the extra sort of different situation around inheritance tax. So what's the current situation for a non-dom for inheritance tax? If you are UK resident or UK domicile, you have to pay inheritance tax on your worldwide assets. So everything that you own on a worldwide basis, you have to pay inheritance tax, or you're liable to if you're over your limits and things. If you're a non-dom, then you only pay inheritance tax on the assets that are held within the UK. So if you hold substantial assets outside of the UK, then you don't pay inheritance tax on them.
Yeah.
So keeping that non-dom status is quite key. But if you live here for quite a number of years, you become what's known as deemed domicile. So that's
How many
50,
years?
yeah, that's 15 out of 20 years. So you've got to be here quite a while.
Right.
But yeah, you probably put down roots. So you're probably going to stay here, I guess. But once you've been here for 15 out of 20 years, you're what's known as deemed domicile, and then that's quite a big change. Then your inheritance tax situation changes completely, and you're the same as a UK, which means when you die, your worldwide assets are taken into consideration when adding up your estate to figure out how much you're going to potentially be liable to for inheritance tax.
Okay. So, yeah. So if somebody's come to you after doing that, they will be domiciled or deemed to be domiciled. So whether it's remittance or not, right? So even if they don't bring the money to UK, they will still need to pay the tax.
Yes, yeah. That's exactly that. You've got it on a T there. But I mean, the thing is, all of that domicile Yes, exactly that. That's the basis now. But things are going to change. So the budget came in and just said we're abolishing um, the whole domicile situation completely. We're just going to do away with that because it's probably because it's a bit complicated. I've just reeled off all loads of little different rules and things that are just
There is some politics going behind it.
indeed. So what the new regime is what's known as foreign income and gains. So it's a bit simpler, but not necessarily easier for those people that are currently non-dom. So, rather than all this deemed domicile after 15 years and paying money to keep the remittance base, all that is expected to go. Instead, the new foreign income and gains basis says that if you live in this country for more than just 4 years, then you start paying foreign income and gains on all stuff. So all income originating from around the world, you'll start to pay it. So interestingly, it's 4 years, but that's tax years. So if you move here midway through a tax year, then that will be deemed as one tax year. So 4 years, it's actually going to be a little bit less than 4 years, I think, with what we can see at the moment. And then you're liable to the worldwide income. And in relation to inheritance tax, rather than you becoming deemed domicile after 15 years, inheritance tax would just be 10 years. Now, there's a big sort of caveats here. None of these rules are coming in until next April, so April 2025. And and I know, but between now and then, we're going to have a general election in this country, and we could well have a change of government. However, if we do have a change of government, this is kind of one of those situations where both parties agree. So it's unlikely to completely change. It's been a Labour policy for a while now to remove non-dom status. So we'd fully expect these rules to still go through, but they might go through with slightly different detail. You never know until they actually come in to law next April as to whether some of the bits of detail that we see now, how exactly that will work. It's definitely something. If you have got non-dom status now and you're going to stay and live here, that you should definitely be aware of, because this could change. There's a whole raft of transition here. So if you've started to live here and you've not clicked in with some of these things, and then we're going to go on to the new basis, how's that work? Well, there's lists of how it's going to sort of change over. So you should get yourself some information on that. But it's lots of it.
I guess quite a lot of people who moved to UK might get impacted with this. Is there any way people can use trusts and things to get away with these?
There's possibilities here around trusts. So currently, when he came out with the budget, he said a couple of things around trusts. He said, if you receive an income from your trust, then we're still going to nab that. That's still going to be liable to tax. However, existing trusts that exist before April next year will keep their status of helping shelter money from inheritance tax. So if you have money in trust that's set up, and the whole reason for it, you're not taking an income from it, but you've got that money sheltered because you don't want that to become liable to UK inheritance tax when you become deemed domicile, then that should keep in place. So we have clients sometimes who've been living here for a while, and they might leave it until nearly 15 out of 20 years before they come deemed domicile, and then they can put money into trust. Now it's money that's held offshore already, because it's not non-UK cited. And then you set up a trust and it stayed. It's what's known as an excluded property trust. Property as in stuff you own, not bricks and mortar, but excluded property. So
Shares.
yeah, money in shares, investments, that sort of thing.
Yeah.
So as things stand at the moment, there might just be kind of one of those windows of opportunity for people who are non-dom status now and are thinking, well, if I get one of these trusts in place, an excluded property trust in place before next April, then some of my money can be sheltered from in UK inheritance tax in the future. So that comes with a big caveat again, though, because like I said, we don't know all the details yet of exactly how things could change between now and next April. But it's certainly something, if you fall into that kind of category, that it might affect you, that you could consider. It's not an easy trust to put in place. I mean, I deal with trusts all the time, and we usually set them up free of charge because they're just a bit of paperwork to set up, and it's all quite easy. Whereas when we talk about an excluded property trust, we're talking about a lot more complications, and we use a professional trust company for that. So it comes at a cost. So it's not something that you enter into lightly. It's something that you've got to figure out that it's worthwhile you doing before you even consider doing such a thing. And again, like I say, it could work out very well for you, or you probably would just kind of know it's there and just wait for the detail to come out a bit more.
Okay. Sounds good. I mean, I guess it is quite a big tax could be quite a bit of big tax for a lot of people who have properties or things outside the country and they moved here. And 4 years, not a very long time, right? So you might come here for 5 years for a job. In the 5th year, you suddenly end up paying quite a bit of tax that you weren't expecting to pay.
Yeah, it's not very long, is it really at all? It will definitely pick up a few more people. I'm sure it's one of those. I saw the costings on it, and they thought that they would raise 3 billion a year on the back of changing this regime. But it's one of those that's if people kind of stay with their same habits of now and don't change. Because of the legislation,
going to make changes. They would, put the assets in trust in the first place rather than, keeping their name and when they're using the non-dom status. So people are going to change a lot of things to make sure they're not caught up with such kind of tax. But yeah, I guess what it is we just have to wait for the time to come and see.
Yeah, I think when we'll hear soon, I suppose, as to when a general election is likely to be this summer or autumn, and I don't know whether this sort of level of detail would be in a manifesto, but manifestos don't tend to come out until quite close. Yeah, because they're rejigging them right up until the last minute. You might find something like that around this in manifestos to see. Yeah, otherwise you wait for potentially in the new government, and then they start working on legislation, and you start hearing what's about to happen. So you've got a bit of time, even if it's not until, say, November, a general election before next April, but not a lot of time, is it? That's a small window, I suppose, to do any planning if you decide to do it. Interestingly, this trust is sort of different to trusts that we've talked about before. You haven't got that 7-year rule of it's immediately in your excluded property. So potentially, and as we know in inheritance tax, once you're over your limits, it's 40%, and it's quite a whack of money if you're talking about big figures.
Yeah, and there's also remittance basis and non-remittance basis. People pay tax, because I remember a couple of years ago, even if you're not non-domiciled, you could get away by not paying tax on foreign income, as per you're not bringing it in UK. but then the rules changed, and for non-domiciles, it's whether they bring the money in or not. They would be charged, isn't it? Even if they do not bring the money into UK.
Yeah, that's the remittance. So they remit it into this country. I think that's kind of the key part. But yeah, I guess everyone's circumstances are different, aren't they? And where they are in that timeline of how long they might have moved here for and not. So everyone's circumstances in that way is going to be different. So, saying this happens to it will be simpler, perhaps post next year and after a couple of years of working through transition. It'll be a simpler kind of thing to understand, just straight 4 years. But in the meantime, then if you sit in this kind of situation, then I guess you need to talk to your tax advisor to understand how it's going to work for you.
Okay. Yeah, definitely. Okay, thank you so much, Phil, and we speak again soon.
Speak again soon. Cheers, DP. Bye-bye.
Bye.